I just wanna wanna give you something. I remember you said you had an issue, and in this video, I'm gonna try to point some of the stuff, like when we see the Asian range is strong, what is going to happen and what market is gonna do for the first time. So when we talk about Asian range being strong, it means that Asian range is already break structure, and Asian range, the low of the Asian range or the high of the Asian range is strong. So we don't expect market to go and run the Asian range. Let's say market is going to the upside like this, then market goes up, you see, then at the end of the day, market come and let's say get somewhere here, consolidate. Oh, I'm drawing it wrongly. Okay, let's say we have something like this, because I want to explain about the going to the upside. Then market is already make a movement like this. Then you see the low of the Asian range come and break structure. It's the same thing like the normally the one we understand about structure and range. Then if market come and break this one, let's say Asian range goes and break that one. So the only thing that we're gonna do right now is to see where is liquidity. If market is already create liquidity, so we know already market, let's say this is our Asian range, all this is our Asian range. So we need to refine our orders inside the Asian range, where Asian range is going to react. Let's say we get a decision point from here. The only thing we're gonna wait is gonna be liquidity for market to come and take it again. So this is what we wanna check. It's not like maybe because we see something like this, and because we know normally like, okay, Asian range market has to run it on both sides, buy and sell. No, remember one thing: if Asian range is very strong, the low of Asian range is strong. Why is the low of the Asian range become strong? It means that it run liquidity and break structure. And also, if you get the Asian range, let's say market is coming like this, then market creates, example, an Asian range, maybe somewhere here. Let's say example, it create an Asian range and market take over. So the only thing that you need to look inside the Asian range is gonna be first things when market is coming to the downside is gonna be the edge midline. It can be maybe market goes up or market come, or maybe let's say example market do something like this, just something like this, maybe break or doesn't break. The only thing you can see is the edge midline. Is there any decision point that is there for you to be able to catch the movement? If you get inside the edge midline and there is a decision point there, just know that this Asian range is not gonna seek first the downside. It's gonna seek the 50% and take over. So this is something that you need to look. This is just gonna be like how can I say it? It's just a quick video. So I hope when you backtest, then you're gonna see how it's making sense. Remember, when the Asian range low is strong or high is strong, why is strong? Because it's a break structure. It run liquidity and break structure. Market won't run it. Let's say during London, market won't run the Asian low. Always market is gonna hold the low or the high of the Asian range. I hope I'm making sense from what I'm talking. Maybe I'm talking rubbish, I'm not sure. Okay, so let's take example here. If we check yesterday, because I wanted to tell you guys since yesterday why I took this trade and what was the reason. Let me delete a bit all this stuff. I hope let me delete all this stuff. Oh la la. I hope they're gonna make sense. Guys, they are refusing. Let me delete again from here maybe. Okay, so this was the price action of yesterday. The only thing that you're gonna see is that one thing that we need to understand is that like every single day we need to mark our structure. When we wake up, we understand where is the market going. If you check with me, you're gonna see market was doing something like this. Market was just busy. Or let me delete and draw again properly. You can see market was making something like this. So you see market was just keep on doing what? On making the higher high, higher low, higher high, higher low. So when we have market is making, lower high and lower low, So when you see market is making something like this, the only thing that we need to understand, this is our structure. And from this structure point, we need to know where is the level that market will likely to go and where is the level that market will likely to go and touch. That is one thing we know. So we know this is our last point that took out the previous lower low and we create a new lower low. So if I'm trading, I'm just gonna put my Fibonacci. Let's say my Fibonacci sit like this. Here I have my premium and here I have my discount area. You guys knows already, here on top I have to see something like this, a QM, and here down I have also to see something like this, another QM. This is, I know, it confirms my range. So when I'm trading, I will look to take my sell or my buy position. Let's say in this case, I'm gonna look to take my sell only if market gets inside this premium zone. This is where I'm gonna sell. I'm not gonna sell in the discount, even if I see a nice decision point. Why? Is because I'm trying to avoid getting trapped by the market. That is what I'm not gonna do. It. I'm not gonna look for a sell in the discount. You're never gonna sell below. Let's say example, you see market here and you wanna sell. No, I'm not gonna sell. I know there is a way where we can sell and market continue selling, but me, I'm not gonna do that. And if we check again from this side, let's say like what happened yesterday, then when we identify, let's say example, we identify, okay, this is the last point. Can you see where I'm pointing there? This is the last structure point, because what is more important for me is the last structure point. Where is the last structure point? That is more important for me. This area was the one that gave me this low. You see, give me this low. If I want to become more bearish, bullish, I want to see market come and break this one here. Then market, when it was going to the upside, see the reaction. Market reacts here and market come again to the downside. So now I change my area, become this high to this low. That is my range, because if you want to see it, you can go to a low time frame. Let us forget first about the Asian range and let us look of what is happening in terms of structure. So you're gonna see this area. This area was the one that produced this lower low, and this lower low take out the previous lower low. If you can check, market took out the previous lower low. So after market took out the previous lower low, now I have my range. So when I have my range, the only thing that I'm going to identify inside my range, if we go to low time frame, you're gonna see I have this QM, market run liquidity, and get here we break the low and we break the measure one. So since I have that one, now I understand this is gonna be my high and this is my low. Now something happened. Market went to the upside, break my last swing. So after market break my last swing, what is that now I'm going to identify? You see, what is that I'm going to identify? I know if I need in H1 for market to break, for me, let's say to get maybe a confirmation of saying market is going to buy, I have my measure one. This is the measure one on H1. If we go to H1, you're gonna see that is almost the measure one in H1. You see, this is the measure one in H1. That me, I'm looking to see if I wanna buy, I wanna see if market is gonna get there and break. You see, so we still stuck from this one. From here, this is where we stuck to this low. So since we are stacking around these 2 points, but anything can happen here in between. This is what I'm trying to explain on M5. Then when I go, on M15, when I go on M15, the only thing I need to understand is that, okay, what happened here? Then I see these things happen during the night. So I just pull out my Asian range things. I pull out my Asian range. Now I end up understanding that, oh, my Asian range was what we call was strong, but all this candlestick is the H1 decision point. That is what most of the people, they don't understand. They get confused, like which the block can I use. This block here is more important to me more than anything else. Can you see here? This is all, this one is my decision point. Then how do I know where market is going to buy? Exactly inside here, because I have market that is already break structure, I have market that is already run liquidity, and I have market that is already create what we call an inducement. So market is already creating an inducement. You see, this one is an inducement and this one is internal liquidity. We can say all of them, they're internal liquidity because they happening inside. Name doesn't matter, but everything's still the same. Liquidity, inducement, and whatever. Then after this, I understand now, okay, this is all my area. You see, this is all my area. But where is my last candlestick that if market can come to the downside? Guys, remember, I did these things live before they happening. It's not like I'm making these things because they've already happened. This is why I don't like going to the old data. I like to show you guys things before they happen. When I went, then I end up refining all my decision point to this area. This is what I end up refining. I said myself yesterday when I was making my analysis, okay, I have this decision point. I know a lot of people, they wait for market to come here. This is why a lot of people, they wait. But the only thing that pushed my eyes to see was there was inefficient price in this zone. Can you see this week and this one? This one trades inside it, meaning that all the order that was resting here was being transferred to this candlestick, to that order block. So this is why I was expecting market to come to this area so that I can do what? I can take my entry. And why I was expecting there? Because Asian range low was what? Was strong. And what is the candlestick that ran all the liquidity inside the Asian range? This is all the candlestick inside H1 that ran all the liquidity. And how was I able to sell like the way I was selling and doing all this stuff? How was I able to catch this movement? This movement is a bit tricky the way I catch it and how I was expecting. The first things that I did was I take this rejection. You see this rejection. Then I say I'm going to monitor when market is going to get to 50% of it. Then I went again to, I think it was M1, if I'm not mistaken, it was M1. There was another week on M1 at the same area. That is where I end up refining everything. I says, okay, there is this week here on M1 where market did not. This one I'm doing is because maybe I want the best risk reward. But I'm going to tell you guys how I end up eating a stop loss there and what happened. You're going to see here, this is what I did. I use this MPL. You guys know the way I use the MPL. So first time market touch here, and second time I was expecting market to respect this week so that we can go to the downside. This is what I'm going to explain to you guys when we get in. So when we get here, the only mistake I made first time was, because I had that all that zone, if you guys remember yesterday, I had that zone to be my zone where I'm going to do it. I'm going to sell. But this is what happened, because I do follow what I understand. I can never come and teach you guys something that I don't understand. So this eye, you see this eye. For me, this eye was a sort of liquidity that they ran while market did not touch the zone. But me, these things of trying to refine a lot, then I say market is gonna hold from here. Oh la la, sorry guys. Then I say market is going to hold from there. So market get here. If you can check, market get here. Then market did what? This was my decision point that I was waiting to. I hit a stop loss here. And this one I was looking at it as liquidity. I hit a stop loss. Then when the market went to the upside, after a touch here, I did not get a snipe entry. I waited for this candlestick to open. When it went up, then I took my entry somewhere here. Then I went with it all the way to the downside. All the way to the downside. You can check this was 9:30. Then 2 minutes late, I was already in from here. Then this is what ended up happening. So market just come all the way to the downside, get here, react, and we push again to the upside. So when market was coming to the upside, I said this area, that was just the guessing game, because I know all this candlestick was the one that took liquidity. Let's say we can start from here. That is the part that took liquidity. So there were still orders around this area that took liquidity. This is why you see me, I take again another entry from here. But you could take an entry. Let's say if you are doubting that area, you could wait for market to come and break the 3 candlestick formation. This one, market to break 3 candlestick formation. And here you could find this. You see this Eden base. You could get the entry from there. From that Eden base, you could get an entry from there. Then you come to downside again. When they break this low, you see they return again back inside there. This could be another entry. And all your targets supposed to be where? Supposed to be this low. You're supposed to be this low. At the same time, you have what we call that area. Remember the area that we identify to the downside. This is the area we identify. And you know what happened here yesterday when I was in this trade? Market plays so many times because I took my entry straight here. Market come. No, I took on this candlestick, this one. After I see market create this MPL again, if we can check the one we call Mera, market create these things here. Then when market come back, I took again the entry from here. I did not move my stop loss because I didn't have a proper break of structure. Market come again back. As you can check, it even take out all this low. Let me show you guys. It's just that my stop loss was a bit down this line. This is why they didn't kick me out. They went again to the upside. They come back again. You see how market was trying to play with my patience. Me, I did not close. I was just waiting. Then here come now how you could take the entry, like what I'm showing you guys. They break this last eye. This is liquidity. This is liquidity. So after they break this liquidity, then you see how they come and fill this what do you call this oh my god, this BFI things. You see the way they come, this rejection, let us call it rejection. They come and fill the 50% of it. Now they start taking over. This could be someone that you're supposed to wait for you to take the trade. Not like me, the way I rush here. But this is supposed to be a proper way of taking the trade. Because you know already you are taking here and maybe your stop loss can be below here. Then markets push again up. You see this area was the one that produced this lower low, the one that ran all the liquidity. This is the same scenario I was explaining to you guys. You can see this candlestick is the one that ran liquid. This is what I look in the market. I need to understand how they're shifting orders. This candlestick was the one that took liquidity all this low. But what happened here? Do you see this one come and trade inside this candlestick? Where is all the order? The order, they are no more here, but the order, they have already changed to this area. This is why you see market could not come to the downside, but get here. But what do you see? How do you take the entry? Bro, these things, they're happening like over and over and over and over. You see? What is this? Is this not liquidity? Is this not the area there you could say, I want to target that eye? Then what happened after that? Market just come back and take here again. Market come back and take here again. Then you know already where is it going to be your target. You know, I'm going to target this eye. That's what I'm going to target. This is where I'm going to look. And at the end of the day, market get there. then create all these things that we know how we could take our trade. Same scenario again, we get there. The only thing we wait is for market to break, run liquidity, break the low, get here, then we sell, they get back again. So now this was what happened this morning. So this morning, the only thing that I saw was this one. First things I saw was M30. This is what I saw in the morning, M30. What is that one? I saw this decision point around the edge midline. But guys, I don't know why I missed this trade. I missed it because I did not place the pending order. After my TP hit, I did not put the pending order and I was busy doing other stuff. So this is what I saw was the decision point that I was expecting. As I explained to you guys, when you have the Asian range midline, it got a decision point. Just know that market is gonna hold. But how was I able to take a sell from here? That's what we have to do. I was on M1 in the morning, and then this is what I did. I did the same thing over and over and over and over. Nothing. The only thing I saw when I wake up, I saw market is already run these equal highs. Then they break this low. Then I saw this one. First time, I'm gonna tell you guys what I did. So I had two orders. One was for market to come and fill this area. That was the one that I was looking at, to come and fill this order. And the first one, sorry, this was the first one. This was my first one. Then I tell myself, okay, since market fell to touch this zone, I remember Lacan, remember we discussed about this. Since market fell to break this one and change this one, so meaning they shift the orders to this area. I do the same thing, guys, that I'm explaining to you. Nothing. Then I take my entry here, market sold. Next minute when it's open, it starts going to the upside. I hit break even. No, I didn't even hit break even. I hit a stop loss on this one. But this one hold and give me double of what I lost here. Can you see, guys? So the only thing that I did here is the same thing. Why did I select this area? That is one thing you need to understand. And when market run, I consider this one as my liquidity. And this area here become the area that run liquidity. I explained to you guys. I trade the order block that run liquidity. And if market shift, then I know. Not because I have an order block like this, I have to start looking from here until decide to look for the sell. No, I look what is the path that run liquidity. This is the path that run liquidity, and market come to fill it. Then my target was just this low. That is what I did. My target was just this low. Nothing complicated. And imagine, we get to the M30, market react here. If you want a snipe entry, you can take a snipe entry. Or if you want, you wait for market to break this high, for market to run this high. Then you take it from here. Then you take it from here. This is your confirmation entry. Or you can even take it below. Market took out all this liquidity. This is the high that produced this low. Market break it. You could feel this inefficiency. You see the inefficiency here. Inefficiency price could be the area that you could take your entry. This is what happened this morning. And I was angry after I found that market went this high without me. So guys, this is one of the quick video of what I do like daily. But if you check all these things, I'm just following range. I'm just following what is happening. Where is my range? Why is the market coming to the downside? Even if we check here from this low to this high, you're gonna see this movement come back just on the discount area. You see here they did the SR flip stuff, then they push to the upside. They break this one, and market, remember my target is still as market has to come and run this one. Maybe we're gonna see it during the London and this other stuff. So let's see what is happening and how things are gonna go. Sharp guys.